You're in the Business Insurance Zone with me, Steve Savant, syndicated financial columnist and contributing author to Backroom Technician. This week on The Biz, the Insurance Company Financial Review. And on today's show, the Rating Services with special co-host, Certified Financial Planner and CPA, Ken Davis.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And with me today, Mr. CLU, CHFC, CFP, and CPA, Ken Davis. Welcome, Ken.
Stephen, good to see you again.
I'm so glad to see you, Ken. I had a huge Memorial Day weekend. I could have used another couple days, honestly. I hope you had an opportunity to salute our vets and anybody that you know. I have friends that did not come back from Vietnam, and I remembered them this weekend as I have for the last 40-something years. I want to come to a place today. We're in Ken's wheelhouse. We're talking about balance sheets of carriers. I mean, the first time I did this back in 1991, I did it for North American. I'm speaking on balance sheet items in 1991. And why was it so exciting? Because right around that time, First Executive went down, First Capital went down, Mutual Benefit went down, and remember, 6 months out, their ratings weren't really changing that bad. They weren't really on the watch list. And all of a sudden it went to hell in a handbasket, and that's why people said sometimes the rating services are so close to the industry, like maybe AM Best is a perfect example of this, where you don't know if you're getting the objective, if you're getting the empirical look that people are looking for.
You know, what was interesting is I remember you bringing the software that we're going to be speaking about today to me at that time, and I actually used some of the concepts that you learned to do two things. One, I had one of the agents in our office there. He had actually sold his father-in-law an annuity with a company that had been A+ rated. Mm-hmm. And back then the rating services really weren't looking at the balance sheets and the at-risk element of junk bonds. And this particular company had a very heavy junk bond portfolio, and the ratio of the junk bonds to the retained earnings was huge. It was 2 times it. Mm-hmm. And they were in trouble. And I said, "You've got to tell your father-in-law to get the heck out of this thing." He says, "Oh my God, how do I do that?" So we went and I talked to the father-in-law, got him out. This is a true story. Took us about 2 months to get the check. Mm-hmm. That should tell you something right there. Get the check, not more than 2 weeks later, big headlines, Wall Street Journal, company goes defunct in receivership.
Right.
And the client, his father-in-law, had to pay like a 2 or 3% penalty to get out. Mm-hmm. But boy, was he happy about that. So going beyond what's in the information on the rating services can be very valuable.
Well, when you think about it, there is a plethora of services out here. I mean, of course, the traditional vanguard for our business is AM Best. Now, AM Best actually looks at, think about this, there's a difference here. Claims paying ability versus the rest of these guys are going to be financial stability. Mm-hmm. So one is, hey, can you just pay your claims? We're not really looking at your balance sheet items. Mm-hmm. It's just that you have the strength to be able to pay that off. Standard & Poor's, S&P is the vanguard, one of the big vanguards. Moody's, another one, and we use them a lot for the real estate issue, which I'm going to get into. Fitch Ratings, which is in respect to these rating services, is really the most newest guy on the block. Mm-hmm. Weiss Report, which some people use and not use now. It's all over the board whether you want to use it or not. It's a standalone financial doc. And of course, the one that they call the homogeneous, we just do a numerical weighting called the Comdex rating. Mm-hmm. Now, when you look at all this, you'd think that a Comdex rating and a S&P and a Moody's, a Standard & Poor's, they're all equal. But in one of my sheets that I give, and again, remember, our sponsor all this week is the Ebix Corporation, which puts out Vital Signs. I've been using Vital Signs almost since 1992. I mean, think about that.
Well, and you introduced that to me back then. I was just astounded. I was just so blown away.
We went to Park City, and the number one thing we saw in Vital Signs need was a vocabulary list. Because we had this great document, summary sheet, right off the convention blank, right from the Blue Book filing, and we just couldn't figure it out.
Back then, Steve, just so the viewers understand what this was like, I had questions about executive life because they had the highest commissions, the easiest underwriting, the best deal for the client. Like, how do you do everything? How is this superhuman company doing this. I said it had to be high-risk assets. But there wasn't software like this. The information was fairly guarded back then.
Oh, yeah.
I literally got in the car and went down to the insurance commissioner of the state of Arizona, and for $15 bought the blue book and started looking through this just put you to sleep information. And I saw that 50% of their assets were in junk bonds. And of course, later on, it came out that they were in bed with Drexel Burnham and that big thing about junk bonds and all the sleazy stuff going on there. But I was telling people, stay away, and the agents would say, oh, but it's A+, and it's great commissions. I'm saying, yeah, but it's going to blow up in your client's face.
Right. I think you have to we have to take due diligence to a whole new level. We just can't just look at ratings themselves. Now, we're not poo-pooing them at all.
No, they're
negative.
a really great start.
They help. It's a good starting place to look at. And when I talk about a company's ratings, I'm looking at MetLife, one of the largest in the world and the largest in the United States as far as insurer. They have their own rankings. They have their own definitions. So anytime somebody says, well, Steve, what does a AA3, which is the fourth level down on Moody's, what does the AA3 mean? A client asks you this, or a CPA or an attorney. I read exactly the definition carved out and crafted by Moody's. I don't write my own docs on this. This is already done. So I tell them what the rating is, what the level of the rating is, and the definition of what that means.
And for the viewers, they have all that with vital signs.
That's the perfect thing about
the glossary is there, the information is there. They can do that and make sure the client understands. Now, what's interesting is clients will ask, what's it rated? Well, the agent says A+. Well, by who? If it's A+, AM Best, it's fabulous. If it's A+ by one of these others, it's quite a ways down the ranking.
We come back, we're going to talk about this because I have a page off vital signs that I've been using for 2 decades, and that page is so golden. I have argued successfully time and again that is a AAA worth a AAA worth a triple. Well, I don't know. We'll see when we come back. We come back from the break, we're going to continue talking about the ratings, their definitions, and what it means to your client with co-host Ken Davis. And don't forget, you can test drive Vital Signs absolutely free by going out to the site www.vitalsalesuite.com/login.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Ebix's Smart Office solution is used by thousands of professionals worldwide. Focused 100% on serving our industry, our proven technology has made us the #1 provider of CRM, practice management, and agency management solutions. Smart Office features include anywhere, anytime web-based capability, on-the-go mobile access, industry-specific functionality, integrations with key industry partners, investment data downloads, robust integrations with other Ebix products, and a high-powered email marketing capability through Constant Contact. Smart Office provides a complete wealth management platform that gives you the tools and flexibility to support your practice today, and an integrated advisor workstation designed to extend your solution as your practice grows. Make Smart Office the center of your practice. Get Smart Office today.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Ken Davis. And remember, you can order today's materials at thebiz.tv. And while you're out there, don't forget to click on the Backroom Technician icon on the Biz blog for your 30-day free trial offer for the best needs analysis and educational material that addresses almost nearly every single financial planning scenario. And just a heads up, before moving forward with anything we talk about today, and we'll be talking about balance sheets all week, always check in with your CPA or your tax and legal counsel. And if you're a broker-dealer compliance officer, if you're FINRA licensed, don't forget you have to check with them before you use any of the stuff we're talking about. But it's going to go, I think a lot of the compliance departments are pretty cool with this. They love, this is due diligence on steroids. And if you're looking to be able to talk about this, again, anytime I use definitions off the balance sheet or the ratings, I always use what they use. I never write this, I never pontificate, I never try to write my own kind of idea or recreate it. Now, Ken, just before we went for the break, you talked about this. This sheet, I don't know if the camera guys can get in closer here or not, but this sheet lists out all the rating services. And to your point, Ken, look at this. If I said to you, I have an A+ from AM Best, that's second to theirs, they call it superior.
Right.
But what happens if I have an A+ from Standard & Poor's?
Well, now it's a 5th ranking down. And we have to put that in perspective. AM Best has 15 rankings, Standard & Poor's has 20, Moody's has 21, Fitch has 21. So what does that mean? Not only do you have to understand whether it's an A from AM Best or Standard & Poor's or not, but what does that mean on their ranking?
Oh, yeah.
Okay, that's one of the reasons I think a lot of people like Comdex, because it's a percentage. That's easier to consume, it's homogeneous, and it's an average, so it's a quick and dirty way to do it. But, you know, these distinctions do make a difference.
The bigger the case, the more this matters.
Right.
And especially when we're doing due diligence on carriers, because people are wanting to know how strong this carrier is on a balance sheet, what are the ratings are. This sheet, I probably, again, have sent out so many times in my career, it really helps get a visual of what's going on. And as you said, it's not equal. The echelons are not the same.
Well, and I can tell you, Steve, we talk about big clients and how important it is in a competitive standpoint, but I got to tell you this. I don't want to be sitting, having sold somebody at 65, I don't want to sit there 10 years later and try to explain to a 75-year-old couple why their retirement assets are on the line. I just don't want to have that conversation.
Oh, no.
So, you know, it's important that when we're playing with people's money, we're not playing, we're actually, it's dead serious stuff. We need to take care of our clients, and this is that extra step that makes a professional insurance agent the guy or gal that's willing to go a step or two further than just do the easy way out and say, oh, it's A-rated, it's fine.
Not only have we went this far, but I really appreciate what EBIX has done here with Vital Signs. Ken, not only the ratings, the level of the rating, whatever it's on, and to see if it's equal to or whatever, to comparing them side by side. Not only the definitions, but now I can look back 5 years on a grid that actually grids this out for me and shows the trend. Are the ratings going down? Are the ratings going up? This trend line is so important to me. And remember, one of the few features that Vital Signs does use, which I really appreciate, is every month we see the ratings watch list.
Well, and that,
by the way, it could be good or bad. It could
Yeah.
be a positive, it could
Sure.
be, but they're on the watch list.
well, that goes to the issue of timeliness too. I remember in 2008 when everything was falling apart in the market, where we would normally be happy with the regular reports on Vital Signs, we started paying closer attention to those quarterly updates. And we have to remember that this information frequently is a year old. It takes a while for all the filings to be placed with all the insurance commissioners with different fiscal years and stuff like that, and getting that in. You know, you're talking about this graph. The one I particularly liked was on the Comdex rating, because it shows the average of what's happening, and it's up and down, and especially during periods of time where it's down, this helps you understand how it compares to other companies. And so while it may be down, it may be still stronger than others. And that was particularly true in 2008 when credit quality was at being focused on.
When you think about it, what we're doing is we're collecting due diligence ratings, their history of those ratings, the definition of those ratings. And why are we doing this? Because third party, especially when you get into larger corporations for business buyouts and all these, their CFOs want to see this doc.
Sure they do.
And all the fiduciaries, CPA, attorneys, and trust officers love this. I have made, I can't tell you how many reports, I'm going to say maybe close to 500-600, just for CPA community alone.
You know, I've been on a mission on a lot of our discussions that, you know, insurance agents really are scared of CPAs and they run from them and they want to hide and all this other stuff. You don't need to do that. This is great stuff. This is where you make the CPA your friend. You do your work, you show them good work, very professional approach. You show them you've done the shopping for the client, you've done the due diligence, you have all your materials together, and they're going to go, wow, I haven't seen this before. You can actually not only make the sale, but you can make new relationships with them because they're going to value what they see in that professional approach.
You just said something huge that I can't believe is so true. Vital Signs has been out since the early 90s. Hardly anybody in the CPA community, the attorney community, the trust, half of everybody I know, agents have never seen this before, and yet we've been doing and distributing this for 20 plus years. That's why I want to encourage you. This is a huge place to position yourself. I mean, this material is golden. And when you're doing high-end cases, they want to know the strength, the ratings, and the balance sheets of these carriers, and it's going to be brought through really a fine-tooth comb to make sure that what we're talking about is good and suitable for the clients. Well, that's what we have for our show today. Remember, you can always follow me on Twitter, Facebook, LinkedIn, or email me at steve@thebiz.tv. Well, that's the Buzz on the Biz for today. You've been in the zone, the business insurance zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.